Don't panic about your Coinbase 1099 DAs. If you open yours and the numbers look way higher than expected, that doesn't automatically mean you owe more tax. Let's cover what's actually going on. Firstly, yes, Coinbase is issuing 1099 forms. Depending on your activity, you may receive a 1099 DA for disposals or a 1099 miscellaneous for things like staking rewards over $600. The 1099 miscellaneous is usually straightforward. The 1099 DA is where the confusion starts. Your 1099 DA includes your personal details and account identifiers, the digital asset name and quantity, acquisition date and disposal date, proceeds, and potentially a cost basis. But here's the key issue. For 2025 transactions, exchanges are not required to report cost basis to the IRS. So in many cases, your 1099 DA is reporting gross proceeds, not your actual capital gain or loss. That's why gains can look massively inflated. Now let's talk about covered versus non-covered assets, because this is where most of the misunderstanding is. Covered assets are crypto you acquire and hold entirely on Coinbase and later sell there. Starting with 2026 transactions, Coinbase will be required to report both proceeds and cost basis for those assets. Non-covered assets include crypto acquired before January 1st, 2026. Any crypto transferred into Coinbase from another exchange or external wallet. For those assets, Coinbase is not required to report cost basis. The form may show proceeds, but the cost basis field may say non-covered or be blank. That doesn't mean your cost basis is zero. It means Coinbase isn't reporting it. And this is why you do not need to amend your 1099 DA just to add cost basis for your 2025 return. Coinbase will not report cost basis to the IRS for 2025 transactions, even if you manually update tax lots inside your account. Amending it right now does not change what gets reported to the IRS for this filing season. So what should you do instead? First, download your form. You can find your 1099 DA in the taxes section of your Coinbase account. If it says pending, it hasn't been generated yet. Forms are typically issued by late January or February, though some users may receive them later. Once you have your 1099 DA, don't blindly copy the numbers into your tax return. Instead, use your full transaction history. This is where crypto tax software comes in. Okay, import your complete Coinbase transaction history into Coinly using API or CSV. Connect any other exchanges or wallets you use. Then upload your 1099 DA directly into Coinly's tax return section. Coinly will reconcile the 1099 DA against your full transaction history, calculate your actual cost basis across wallets, and generate accurate capital gains reports. From there, you can generate Form 8949 and Schedule D, marking whether transactions were reported on the 1099 DA and whether cost basis was included. That's the key difference this year. It's largely a checkbox change on Form 8949, not a complete overhaul of how you file. You don't need to panic or rush to amend your 1099 DA forms. You just need accurate cost basis calculations from your full crypto history. Use a preferred crypto tax software, reconcile your data, generate your reports, and file as usual. I've linked the written guide below if you want to follow along step by step. Good luck with the April deadline, and I'll see you in the next video.